Hey guys, I hope you're well and welcome to today's market update. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. In today's little update, we're going to take a look at two interesting charts. It's a chart that helps us to understand what the dollar yen should be up to, and another chart that tells us a little bit of what we could expect from the dollar CAD. And let's begin with the Japanese yen chart. So this is a chart, it actually shows us three different drivers. In green, you have the Japanese stock market. In yellow, you have the US 10-year yield. And in light blue, you have the dollar yen. Now, these two other additional markets here, the Japanese stock market and the US 10-year yield, tend to explain quite well what the dollar yen should be up to. Now, what is interesting, and as you probably read as well here on Trade Captain, is that the Japanese stock market has been soaring lately, and traditionally this tends to lead to a higher dollar yen. But we can see that there's quite a significant gap here between the green line and the light blue line, which is the dollar yen. So the Japanese stock market is suggesting to us that maybe the dollar yen should be trading higher, as long, of course, that the Japanese stock market does not correct all the way back to where it started in the beginning of September. We can also, just by looking at this, clearly see here that the US 10-year yield, which is the yellow line here, does a quite good job in explaining to where the dollar yen should be trading at. And you can see that the US 10-year yield is moving up higher, and that has supported the dollar yen. But from that single individual variable, the dollar yen is actually fairly valued, just by looking at this chart. Now, what is going to explain what's going to happen with the dollar yen going forward? Well, what you want to keep an eye on is, of course, US monetary policy and the potential tax cut breaks in the US and general economic growth. When economic growth rises in the US, we tend to see higher interest rates, and at the same time, if the Fed looks to increase interest rates as well, that should lift the US 10-year yields. And I think in the longer run, I think that's really what everybody is anticipating, given the plans of the Fed and the general US economic activity. But from a trading perspective, we can see here very clearly that there's a quite wide gap, and maybe the dollar yen should be trading higher and not lower in the next few weeks. Another interesting market is the dollar CAD. So this is the dollar CAD, and you're looking at two different lines. In light blue, the dollar CAD, and in the other color here is the swap yield differential. Now, the swap yield differential is the US 2-year swap versus the Canadian 2-year swap. Now, unless you have a Bloomberg or Reuters platform, it's very difficult to get hold of these different time series. And it's the sort of interest rates that the big banks look at. Now, these swap rates incorporate a bunch of different things. Expectations about where interest rates are going to be 2 years in the future, economic growth, and comments from the central banks and so on and so on. And we can see here how the swap yield differential declined from a positive 0.6 to pretty much a negative 0.4. And since then has risen, and it's doing quite a good job explaining to what's going on here with the dollar CAD. Now, the reason for the dollar CAD rising is, of course, that the Central Bank of Canada, being very aggressive in increasing interest rates, has now backed off and telling us that they probably want to wait until they engage with further rate hikes. And that explains really why the dollar yen or the dollar CAD has been bouncing from the lows. And here as well, you can see there's a little bit of a gap between the dollar CAD and the swap yield differentials. Now, there's more to the story and more to the dollar CAD. In fact, there's another key driver that tends to explain where the Canadian dollar should be trading at, and as well, it does have an influence on the swap yields, which for now, if you look at this chart again is pointing higher, the swap yield differential, in other words, is being negative for the CAD. But this other variable here could actually cause maybe the swap rates to change. So what are you looking at right now? Well, it's the dollar CAD, but instead of writing it dollar CAD, I wrote it CAD dollar. And then the other line here is the price of crude oil. Now, the price of crude oil, as you can clearly see, it bounced nicely from lows of about $25 in the beginning of 2016, and since then they have risen, and right now they're at $57.06. And this is important for the Canadian economy. You can clearly see here that how there's a link between the Canadian dollar and crude oil prices, because the Canadians export and produce crude oil. And you might remember that the Canadian economy, suffered quite substantially in 2015 and 2016 because of this. But now with crude oil gaining, this could potentially boost the Canadian economy and could potentially boost the dollar CAD. So if you look here, you can see that there's a quite wide gap between where crude oil is trading and where the Canadian dollar is. Again, this is the inverse of the dollar CAD chart I showed you in the past. So when this chart goes down lower, that means that the Canadian dollar is weakening, and when this chart goes up, that means that the Canadian dollar is gaining. And obviously I'm referring to the white line in this chart. So there's a separation between the white line and the yellow line, which is crude oil prices. And they hint that maybe the gains we've seen in the dollar CAD lately, the dollar CAD pair that is, might be limited. So watch crude oil and the dollar CAD in the next few weeks, as I suspect we could see some realignment here, or maybe the Canadian dollar gains a bit as the dollar CAD catches up with the price and development of crude oil prices. And that, guys, concludes today's market update. Don't forget to subscribe to us on YouTube for more videos like this. Thank you.